all the residential projects, if they're worth 18,000 crores and the market cap is 18,000 crores, basically I'm getting the commercial business and the land bank for free.
So it is undervalued.
I don't want to say that.
This company is, I mean, obviously this company is a very old company, right? And now in the last few years, it's been trimmed down and it's taken its sort of final shape or form. It seems a lot more organized and structured in terms of where it is today and in terms of where it's going in the future.
See, one is you can't compare the business to the past at all.
Understood.
That's why this company becomes a lot more different compared to the companies that we've earlier spoken
about. So you compare it to other real estate companies now?
Not even that really.
Okay.
So it's a very unconventional way of looking at it because there is no past to compare.
Right.
So you look at it in individuality as it is right now.
Okay.
And there is a past to compare, but those were different businesses.
Right.
You can't compare a real estate business to a conglomerate, which was primarily cement and textiles.
Right. This episode of Taking Stock is brought to you by Paterson. Hello and welcome to another episode of Taking Stock. This is a weekly podcast where every week we pick one company, one stock and dive into it. This week, I'm a little confused, to be honest. Which company are we talking about? So recently, there is a 127-year-old company called Century Textiles, which has now suddenly become Aditya Birla Real Estate Limited. Yeah. Right? What happened?
So it was called Century Textiles.
Correct.
But here's the confusing part. They were not only in textiles, they were doing a bunch of other things.
It's confusing for you also. I thought it was only confusing for me.
I think it is confusing for everybody, including the people running it. So anyway, so they were doing paper, they were doing cement, they were doing textiles, they had real estate, they had everything. Then what happened is that over somewhere in the mid 2000s, it came under the Aditya Birla group.
Okay.
Because they acquired majority stake. It was already a Birla company, but a different Birla group. And now it came under Aditya Birla group.
Okay.
And then what happened is that these guys trimmed down the business, restructured it.
Right.
And now real estate is the major business. The rest of it has gone away.
So what was the rest of it that's gone away?
Textiles, pulp, paper, cement.
Okay.
And 2-3 other things.
Right.
So that's gone away.
Right.
And now this remains, real estate remains. And real estate is the majority business. And hence in October 24, they changed the name of the listed company from Century Textiles to Aditya Birla Real Estate.
Understood. But the ownership remained the same.
No. So here is the tricky part. So if anybody else is also confused, I'll sort of take a step back. Like a few steps back all the way to 1897. Okay, sorry. So this was started by...
When our audience was in their prime and peak.
When Paterson was 5 years old. Okay, so this started in 1897 by Wadia. Wadia Group's grandfather or whatever. And in 30 years, it was acquired by another person called Chunilal Mehta.
Okay.
So basically 1930-ish. And this acquisition, and that guy actually owned Century. So it became Century. Right? Now in the 1940s to 50s, the Birla back then, who's the prime Birla, right? The KMP Birla.
Main character Birla.
Yeah, the MVP. He's gone and acquired this company in parts over 10 years and gotten majority control over it. Because he's like, this business is great and I love it. And he stockpiled it and acquired it over a period of 5 years, taken management control. Now, this Birla was called, so there were two Birlas at that time, RD Birla and GD Birla.
Okay.
Brothers.
Right.
So RD's gone and acquired. Now, GD's son, he's given him the company to manage.
We're going to have to put the family tree.
Yeah. So he's given GD's son to manage this business because GD's son, BK, is the guy who's an expert at textiles and stuff like that.
Okay.
Right? So this has come under the BK Birla group.
Okay.
Which existed till about somewhere in the 2010s to 20, where BK Birla was still managing the entire group, which is primarily Century and Kesoram. And then he passed it on to Aditya Birla.
Understood.
Aditya Birla Group.
Right.
Okay. So basically, BK Birla Group, the successor is now Kumar Mangalam Birla, who's the chairman of Aditya Birla Group.
Understood.
So that's how the transition has happened. Now the funny part is, like, which got a little confusing for me, and I'm sure it is for a few people as well, is So I spoke about GD Birla, right? GD Birla and then BK Birla.
Right.
BK Birla's son is actually Aditya Birla.
Understood.
But BK Birla Group and Aditya Birla Group were separate.
Right.
Because GD Birla actually gave all his business to Aditya Birla and not really his son BK Birla.
Okay. So he, in his will, he wrote his grandson's name.
Yeah. So it went to the grandson. So the grandson was operating his own companies as Aditya Birla Group, which is your Grasim, Hindalco, Ultratech, which is supremely great.
Right.
And BK Birla was relatively low-key companies. Not really. I mean, they're successful.
Right.
But still relatively low-key in Century and Kesoram. Now, when BK Birla was sort of passing away or whatever, retiring and stuff like that, he said that I'm going to give it to my son.
Right.
Who's Kumar Mangalam Birla, who's the chairman of Aditya Birla Group.
Right.
So now that entire thing has come under one group.
Understood. So this restructuring has happened now, like in the recent past?
See, it's been taking place since 2015-16-ish.
Okay.
That's when Kumar Mangalam Birla got on the board of this company. And since then, they're sort of restructuring the group since those years, because it was a conglomerate.
Right.
So they had to get rid of various parts, take a call on what to keep and what not to keep.
Right.
So effectively, I'll just sort of list out 5-6 things they've done to make it simpler. One is they had a rayon business or a viscose fiber business in Century, which is now leased to Grasim.
Understood.
It's not sold. It's leased. So there is a 600 crore annual royalty for some 10-15 years. I'll have to go and check.
Right.
But that is the lease that is there. So that is one thing that has sort of gotten out of BK Group.
Okay.
Right. Or Century.
Right.
Let's call it that. Textiles business was discontinued. Then they had a cement business, about 13 million tons per annum capacity, which is sizable, which went to Ultratech.
Okay.
Ultratech is part of Aditya
Birla Group. Yeah.
So it went there. Then there was a yarn and denim division, which they tried to demerge, but and sell it to another group, but Manjeet Global Group.
Right.
However, there were a lot of issues in that transaction because the labor union was opposed to it and several other things, several other objections, because which the transaction got stalled.
Right.
So they just demerged the business. And then they had a paper and pulp business, which got sold to ITC.
Okay.
Because ITC is one of the largest manufacturers of papers in India. And they bought it for 3,500 crores, or 5 lakh MTPA capacity, which happened in 2024.
Okay.
So that's the last of the transactions.
Right.
So now this company is only real estate.
Understood. And it's finally sort of taken its final shape or form, or whatever you call it.
So I think I've answered the...
Fair enough.
Yeah.
Now, okay, so now the next question that I have here is, right, that I don't want to talk about the real estate market, because obviously I think it's quite established that the real estate is an ever-growing market, and in India it is growing, and it's only going to keep growing, right? Where does Aditya Birla or Aditya Birla Real Estate come into the picture now?
So they've been focusing on premium, luxury projects. Right. They're in fact... the placement is luxury. They're doing some projects which are mid to premium.
So this is residential?
Residential. One part is residential, one part is commercial.
Understood.
Residential is much larger compared to commercial. Right. Residential, they've got presence across Mumbai, Delhi, Pune, Bangalore. 4 cities. Same with commercial. Only commercial is actually only Mumbai right now. But anyway, so focus is on these 4 geographies. Positioning is mostly luxury. They launched a couple of projects in mid to premium over the last couple of years, but they want to sort of focus and position themselves as luxury and premium. So that's the placement. And what did you ask?
No, so where their place is residential. Now this is across the country?
No, 4 cities.
4 cities.
Mumbai, Delhi, Bangalore, Pune.
Understood.
Only 4.
And you said there's a small chunk of it which is also into commercials.
Yeah, so commercial, I don't know if you've noticed on Worli, if you go, there is a building called...
I've not been Worli in a while. Okay.
So there's a building called Birla Aurora, and there is one which is Birla Centurion. There's a Siemens office inside. And
Okay. Yeah. So, I mean, that's an old building.
Yeah, so that has been with them forever.
Right.
So these 2 are old projects. So they fetch an annual rent of about 65 crore each.
Okay.
So about 130 crore of revenue will come from as lease revenue from these two commercial projects.
Understood.
And they're adding 3 more now. So they're adding one more in Worli itself. So if you remember, Kamla Mills, opposite Kamla Mills.
Palladium.
No, not that side, the other side.
Okay.
The Smash side.
Okay.
The IKEA side. Anyway, so opposite that there is a whole...
IKEA?
Yeah,
I've not been there for a while.
So anyway, so that side is a massive Birla project going on where they're building a luxury residential property.
Understood.
And there is a commercial space coming up there as well.
Understood.
So the third one will be in Worli itself. And then they're building one in Thane and one in Prabhadevi.
Got it.
So there will be about 5 projects on the commercial side. So the rough projected revenue that they'll get in terms of income from all of these, once all these projects are completed, will be about 1,000 crores.
Understood.
And so residential is still the major chunk of where they're operating.
Right.
That's where they are in terms of... and just to sort of also give you an idea in terms of size and scale, last year the amount of bookings they did, they would have probably come in the top 10 to 15 real estate players in India. So they've grown pretty big.
Right. So essentially now that this company is, I mean, obviously this company is a very old company, right? And now in the last few years, it's been trimmed down and it's taken its sort of final shape or form. It seems a lot more organized and structured in terms of where it is today and in terms of where it's going in the future.
Yeah.
Right. So what are the, now when we're looking at it from a stock point of view, is it a better stock or are the financials better? Let me ask it in a different way, right? Is the profitability of the company a lot better now because a lot of the dead weight has been trimmed down?
See, one is you can't compare the business to the past at all.
Understood.
That's where this company becomes a lot more different compared to the companies that we've earlier spoken
about. So you
about.
Compare it to other real estate companies now?
Not even that really.
Okay.
So it's a very unconventional way of looking at it because there is no past to compare.
Right.
So you look at it in individuality as it is right now.
Okay.
And there is a past to compare, but those were different businesses.
Right.
You can't compare a real estate business to a conglomerate, which was primarily cement and textiles.
Right.
So you're not going to look at it from that lens. Most of that business has been trimmed down and it's only real estate now. So it's got a whole different way of looking at it. And that's where I think a lot of people are not able to figure out how to look at the company one and how to value it as second. So I'll just sort of give you a brief about, so till 2024 or some parts of 25 as well, the pulp and paper business has come into the financials because the transaction happened very recently.
Right.
So it has just about gotten out of the books. So now it is a pure play real estate company.
Correct.
There is no point at comparing revenues because suddenly you will see that the revenue has dropped by half.
Right.
It's actually because the business has been sold out.
Correct.
Additionally, what has happened is the real estate business is also something which is very new.
Right.
So look at it this way. The Aditya Birla group took over the company only, say, 10 years ago.
So you're saying you cannot really compare it to existing strong real estate players?
You can't, and you can't even compare it to itself because the growth has been phenomenal.
Correct.
So for example, imagine a small company growing at least double every year.
Right.
You can't compare the historical numbers and form a normalized trend line.
Right. Right.
So if I sort of just look at the last, say 21 to 25, right, FY21 to FY25, the 4 years, there's something known as a pre-sale.
Correct.
So number of bookings, right?
Right.
How much revenue gets committed.
Right.
Let's put it in a very simplistic manner as the pre-sales have grown by 90% CAGR over the last.
So just to clarify, pre-sales of the properties, residential or commercial properties. Right?
Residential, commercial is on lease.
Okay, fair enough. So residential properties, pre-sales.
Pre-sales have grown at a 90% CAGR.
Right.
Collections, which is basically once people book, it comes in a pre-sale.
Right.
Then people pay.
Correct.
That comes in a collection.
Right.
So collections have grown at 104% CAGR over the last 4 years, which is practically more than doubling every single year.
Right.
So you can't even compare the past and say, oh, has the company done well? Of course it's done well.
Right.
The base was small.
Right.
And in the case of a lot of these companies that we cover where the base is small, they're selling goods or they're transacting faster moving objects.
Right.
In the case of real estate, these are projects which get executed over a few years.
Correct.
So the way of looking at revenue is also very nuanced and
it will also depend on the amount of land they have and where the upcoming properties are coming up, right?
Or the stage of development, for example. So if you hence look at the pre-sales, it has been 90%, collections have been 104%. That has happened because people were in a booking phase at a certain point in time because the projects themselves were in that phase.
Correct.
Now the projects, as they get completed, people will actually pay up, and then it will start coming into the cash flows.
Right.
So if I have to give you a broad view, at least give you some substantiation or some number, see the total amount of sales that the group or the company can generate at this point in time is about 70,000 crore.
Okay.
Now I'll break this down. Till date, from all the projects that they have already delivered, they have collected about 6,500 crore.
Okay. So you're saying the capacity is 70,000 crore and what has been realized is 6,500 crore.
What has come into the bank is 6,500 crore.
Right.
What is outstanding collections?
Okay. So the sales has been made on paper, sales worth 70,000 crore has been made?
No.
Okay.
So I'll break it down. Bookings and collections. Till now, people have paid and taken possession and money has come in.
Right.
That is 6,500 crore.
Correct.
Outstanding collections are 12,000 crore.
Okay.
Basically, people have booked but are yet to pay because either there is a gap or projects have not been completed or whatever. So that is 12,000 crore.
Right.
So this is 12,000 crore that will definitely come in the near to medium term.
Right.
Then there is a unsold property, which is, for example, not all flats get sold.
Correct.
So there is an unsold version of 5,000 crore.
Okay.
Which will probably come in the medium to long term because it will go at some point.
Right.
And the unlaunched properties.
Oh, understood.
Which are currently in the process of getting built, foundation has been laid, building is ready to this half level or whatever. Whatever other reason. That is 46,200 crore. And that totals all these four parts
total to
up to 70,000 crore.
Understood.
So the 2-3 things to look at in this case are that bookings are at 80%, unsold inventory is only 20%.
Correct.
That's a positive metric.
Right.
One. Number 2, collection efficiency, which is how many people have booked and how much money has been collected.
Correct.
Is at 35%, which is collected divided by collected plus outstanding collections, which is 35%.
Correct.
This can go up to 60%.
Right.
As projects get completed and as people pay, get possession, move in, this number will go to 60%.
Understood.
And the unlaunched inventory will slowly become launched over a period of time, fulfilling this entire cycle.
Understood.
So over a period of time, looking at what is there right now in terms of projects, projects that are ongoing, they have visibility of generating 70,000 crore in revenue.
Understood.
In totality. At this point in time, however, if I look at, say, for example, FY25, they did a revenue of 1,200 crore.
Right. So it's a ridiculous jump.
It is a ridiculous jump. And hence the discussion is not going somewhere
in a very sense of what is the revenue, what is the
EBITDA. So hence, and what also happens in this case is that for real estate companies, there's a difference between revenue and collection of cash.
Correct.
So when a project is built and ready, they will count it as revenue. However, that does not mean money is collected.
Right.
So for real estate companies, especially like this one, I would not really look at the income statement too much. But I would look at the cash flow statement and figure out when the cash is coming in. That is the larger risk factor.
Correct.
Also, the cash coming in will determine where the cash goes in terms of new development, in terms of clearing out debt, in terms of new projects, etc., stuff.
Right. Makes sense. I understand what you're trying to get at, right? That, I mean, anybody who's sort of tracking this, there is no past historical data that you should measure it by. There is the only thing that you should measure it by is sort of the cash flow and the number of conversions from booking to an actual sale or booking to money hitting the bank account. Right? That's the real metric here.
And number of projects that are unlaunched right now and become launched.
Understood.
And hence the entire cycle. Unlaunched to launch, launch to pre-sales, pre-sales to collection.
Correct.
That is the cycle I'll look at.
Right.
And collection to where the money is going.
Right.
So my revenue side of it is, so the entire cycle, if I have to mention again, so it goes from unlaunched to launched, launched to pre-sale, pre-sale to collection, collection to excess cash flow because there are costs involved as well.
Correct.
And then that cost also will take into consideration new projects, blah, buying land, etc. And after that, what is left?
Understood. Now, okay, so the next question again, which is the obvious question, which I'm assuming will not have a very obvious answer, is how do you value this then?
Okay, so what I'll simply do in this case is, because we just discussed the cycle,
Right.
what will matter is how much money is collected. So, and this money will get collected over the next 10 to 12 years.
Correct.
So again, when we look at our traditional metrics of giving it a certain multiple on a 2-year basis, etc., does it make sense? Not really.
Not really, yeah.
So you have to take a 10-year, 12-year view.
Okay.
Because this money is slowly going to keep coming.
Right.
As new projects also get built, etc., So if I just have to consider the 70,000 crore number plus, this number, and figure when it will get collected,
right,
I can sort of project my cash flows basis the ongoing projects and stuff like that from FY26 all the way till say FY30 or 31, which is a 5-year period, and then 31 to 36, which is another 5-year period which I can club together.
Okay.
So make it like a 2-stage projection.
Right.
Because I don't have visibility of per year beyond 5 years, because I know what's happening in the next 5 years, not beyond that. And if I have to then figure out how much collection will happen. So roughly, let's put it this way. The amount of cash that the company will get from selling its residential projects over the next 10 to 12 years is about 70,000 crore.
Correct.
Right? And this is something that the companies, you can derive it because the company has given you the number.
Right.
And they've given you details in terms of what projects they're working on, their expected timelines and stuff as well.
Right.
So 70,000 crore is the number there. The cost associated with further development, because not a lot of these projects have started, whatever. So that is going to come to roughly 30,000 crore.
Okay.
Over this period. So roughly they'll make a cash flow of 40,000 crore.
Correct.
On that, they'll pay a tax of about 10,000 crore. They'll be left with 30,000 crore in their hand.
Right.
So effectively, to value the company, what I will look at is how much is that 30,000 crore worth in today's day? Because I'm buying the share today.
Right.
So if you discount it at a say 11.5, 12% rate, it will come to about 18 to 19,000 crore.
Right.
That is the value of the residential part of the business today. If you have to put this logic in place. The market cap of the company at this point in time, as we speak, is 18,000 crore.
Is it lesser than that?
18 to 19,000 crore.
Okay.
Roughly the same range.
Right.
So basically, if these assumptions are taken into consideration, then the market cap equals these assumptions. However, the company also has a commercial business, where there is a rental yield of about 1,000 crore expected every single year.
Correct.
And on top of that, the company has a land bank of 157 acres, which we've not really considered in terms of how much value it will yield, because you don't know or you don't have visibility on that land bank. So the easiest thing,
but it is going to have some value.
Yeah.
Right.
So the conventional way of arriving at a value from that is to give it a multiplier on the FSI.
Right.
And then see what the value is.
1 second, slow down. What is FSI?
Floor space index. That is another conversation.
Okay.
So how much you can build on raw land and how much hence will be the monetizable value of the property.
Okay, understood.
Okay. So, so on that, you can take a value. So if you look at so basically if I have to do the math, without getting into what the commercial business's value is or what the 157 acres is at, simplistically, if I look at it, all the residential projects, if they're worth 18,000 crores and the market cap is 18,000 crores, basically I'm getting the commercial business and the land bank for free.
Understood. So it is undervalued.
I don't want to say that.
Okay, I'm just asking. So essentially you're saying that it's currently fairly valued for the residential business, but there is a lot more beyond just the residential business that is available.
There is more beyond
within
that,
the stock,
which you're getting, which you're not really paying for when it comes to the stock.
Right.
So that's something you might just sort of get for free if you're valuing it using the method I said.
Fair enough.
And hence you can't even compare it to other real estate players, because everybody will be in a different cycle when it comes to their land bank, their ongoing projects, their collection efficiency, even their pre-sales, for example. See, Birla, being new in the business, was still able to get pre-sales because of the Birla brand
name. Correct. Yeah.
If Birla is building a project, you know that, hey, the name is reputed. I can see in Bombay they're building in Worli. They've got these 2 buildings also.
Correct.
And it's now under the Aditya Birla group. People are like, sure, why not? Like, pay for it. Some other company wouldn't have been able to pull this off.
Of course.
So from that angle, I could compare it to peers, but then there's going to be a large difference in terms of project duration, collection, premium, not premium, location, geography, blah, 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 which is absolutely unnecessary when you have so much visibility in terms of every single project that they're doing and what stage is it at and what is the pre-sale to collection number for each of those projects.
Makes sense. Cool. Sounds good.
So pretty straightforward.
Yeah, you can make what you want out of this now. Fair enough. I think that's it for this week. Thank you so much again for listening. Please let us know in the comments which companies you'd like us to cover, and we will definitely add them to our list and try to cover as much as possible. Thanks a lot and see you.
Disclaimer. This content is for informational purposes only. None of the stocks, brands or products mentioned are recommendations or endorsements.